Well, good afternoon, good evening, good morning, wherever in the world that you are. Welcome to this discussion hosted by the Aspen Network of Development Entrepreneurs, together with the IKEA Foundation, coming right on the heels of the Climate Change Conference in Glasgow, and focused around how can green entrepreneurs help deliver on COP26 goals. My name is Richenda Van Leeuwen. I am the Executive Director of the Aspen Network of Development Entrepreneurs, and I'm delighted to be joined this afternoon by a number of distinguished panelists. And I would ask that each of the panelists do turn on their cameras now so I can introduce all of you. I'm joined first of all by Dr. Arunabha Ghosh, who is the Chief Executive Officer of the Council on Energy, Environment and Water, which is colloquially known as CEEW in India, which are very well known for a lot of work that they've been doing as a think tank, but I would say going beyond a think tank also really as an action tank as well, really helping to catalyze a lot of the thinking around climate action, both in the context of India, but more broadly as well. And Dr. Ghosh has had a very distinguished career, playing key roles in the creation of the International Solar Alliance, and also was a founding board member of the Clean Energy Access Network, which I was involved with setting up as well when I was in an earlier stint at the United Nations Foundation. And he's also served on the UN's Committee for Development Policy and so much more as well. He's a very distinguished leader on an array of climate action. I know has just been in Glasgow for the Climate Change Conference, and I'm sure has some valuable insights for us on the basis of everything that has been taking place over the last 2 weeks. Immediately to my right is Carol Kariuki, who is the CEO of Greenport Enterprises. She's a co-founder, and Greenport Enterprises Limited is in Kenya. She's a green entrepreneur and is leading a business which is focusing specifically on wholly integrated bamboo, focusing on large-scale nurseries, plantations, and is starting Kenya's first bamboo processing factory as well, really focusing on sustainable agroforestry. Before starting Greenport, Carol was the managing director of Savings and Loan, which is Kenya's largest mortgage business. And so she's had a long and exemplary career in both housing and finance, and now really taking her entrepreneurial work and her background in finance and leading as a social entrepreneur, really looking at climate action on the ground in India. I'm also delighted to welcome Vivek Singh, who is the head of the portfolio on employment and entrepreneurship at the IKEA Foundation, and he guides strategy, heads programs and partnerships, and he has also had a long and distinguished career focusing on large-scale development programs, including with groups like the Aga Khan Foundation, Plan International, and Nielsen Foundation, and has really focused around sustainable livelihood and civil society strengthening, and has worked across Africa, Asia, and Europe. And so welcome, Vivek. And then last but certainly not least, Santosh Singh, who is the director and head of energy, climate and agriculture, 3 key areas that we focus a lot on here at Andy for IntelliCap. And he's been with IntelliCap for the last several years, I think 3.5 years. And before that was an entrepreneur himself and co-founded an enterprise focused on improving learning outcomes and employability of rural youth for over 10 years. And also has been in the past very involved with Dharma Life and directed the Dharma Life Foundation for 3 years. So welcome to each one of our panelists. Thrilled to have you all with us today, and going to kick off now. It's a discussion that we're going to be hosting around green entrepreneurship and really tying it in with the outcomes from the climate change conference. But I want to kick off by something that we've seen here at Andy, which is that green entrepreneurs particularly, and this is a question to all panelists, they're often undervalued for their role in developing and deploying solutions to climate challenges. They rarely get enough attention from policymakers or funders. And for those of us who have been working on climate action for many years, we have really seen a lack of focus, particularly on the small and medium-sized enterprise sector as solutions providers in the context of climate action. They're not really mentioned very much in national adaptation plans. I have yet to see an NDC, and maybe I'm wrong on this, but I've yet to see an NDC that explicitly talks about how to engage with the small business sector in their country. And climate finance tends to focus on the big transactions, and we're all very much focusing on corporate transition, but not really about how do we bring that financing to the entrepreneurs like Carol, to the startups, to help the growing businesses. So why is this? And what can be done to help get us to a consensus or at least an approach where we can engage and support more green entrepreneurs, given that they are absolutely essential to us being able to achieve, whether it's 1.5 degrees, 2 degrees, or net zero by 2050 or 2070, which we've heard many pledges. So maybe Dr. Ghosh, you could kick us off, but each of the panelists, we welcome you all to tell us what your thoughts are in this area. And yes, please go ahead.
Unmute myself. Yes, thank you so much, Richenda, for having me in this very important conversation. I wish this conversation were happening 2 weeks ago when COP26 actually kicked off. And I say this not just tongue-in-cheek, but with all seriousness. The reason green entrepreneurs don't get the attention is because I don't believe the COP process is oriented towards solutions. And I'll let that sink in for a second. We've spent 3 decades since the UNFCCC was negotiated, and we have certain structured tracks along which negotiations happen: mitigation, adaptation, finance, technology, and so forth. And then to feed into those tracks, we ask countries to keep submitting their plans. But if you actually think about who will put their money where our mouths are, it is going to be entrepreneurs. And entrepreneurs are not at the table. Similarly, if you don't have a solution focus, then the same entrepreneur who could actually be delivering a mitigation and an adaptation solution does not know which track to follow. And then if that solution were indeed accepted, does not know where to go run and get finance. You were absolutely right, Richenda, that the money is oriented towards the larger transitions, the bigger projects. And even after we've created institutions like the Green Climate Fund, etc., the transaction cost of accessing that money has actually increased when the whole purpose of creating it more than nearly a decade ago was to reduce the transaction cost. So is it a surprise then that we come year after year to these COP negotiations expecting a different outcome, when actually we are neither focused on the people who have the energy to drive the real solutions, nor are we focused on the processes that could help those people drive the solutions. So let me stop there, but maybe later in the conversation, we can talk about even outside of the COP process, why they don't get attention, but I don't want to keep belaboring the point. Let others come in. Maybe they have a different point of view.
So thank you. So let me throw the floor open to other panelists. I mean, Vivek, you serve both with a foundation, but also a foundation of a large corporation. So how does IKEA Foundation see this? And you have to unmute yourself, please.
Hi, yeah, thanks a lot. Let me build on some of the points that Dr. Ghosh just articulated. I think for us, this has been a new sector, and in the sense that we are, developing it and building it, and we feel the high potential of promoting green entrepreneurship, there are a couple of points which I wanted to table. One is the nascency of the sector and the limited awareness of the role and the impact that green entrepreneurs can have on livelihoods as well as on the environment. And this is again, linked to the non-availability of robust and credible evidence at scale on the impact of green entrepreneurs in the whole sector, especially on environmental impact. Just for an example, there aren't many studies when you look at where and how certain climate incubators or accelerators have been successful. And this, limits the kind of investment that can be attracted to such incubators and accelerators. Now, there is anecdotal evidence available. We see that momentum building up. But this is at a very scattered and a subscale level. So this really doesn't help in creating a strong business case to either convince the funders or adequately inform the policymakers. The other point which is linked to this is the limited scale or the subscale of operations of green entrepreneurs. And that is primarily related with a lot of factors which are barriers that inhibit their growth. And we are familiar with most of them, like inadequate or non-timely high cost finance, or you have other challenges like building the capabilities of entrepreneurs, and particularly when it comes to climate, there are certain capabilities or technicalities that have to be factored in. Then another aspect is giving them access to the right kind of networks so that they can grow and expand the businesses. And we have also felt that we see that the role of mentorship, particularly the role of psychosocial support, is so critical in an entrepreneur's journey to help them grow and scale up. And I would certainly concur with the point that Dr. Ghosh said, that they are not at the policy or at the funders table. Because if you look at entrepreneurs, if we work closely with them, we see that they are very busy, very occupied with setting up the businesses, they're running the businesses, growing the businesses, and they may not have the right kind of associations or networks or positions to influence. So in the sector today, we feel that, or we see that there is limited kind of an association or not that strong ecosystem of advocates for green entrepreneurs. And therefore, organizations like ANDE have a very important role to play, because then you create that kind of platforms for such entrepreneurs to come and express or talk about the challenges, about their learnings, about their successes. And that then informs practice and policy in a much more informed way. So I think these are some of the ways or some of the places where we feel why green entrepreneurs or entrepreneurship has not really taken off in the way it should be.
So, Carol, let me turn to you now for a response there. You are our entrepreneur on the panel, and so my bad for not putting you on first to talk about the experience of entrepreneurs. So nothing about us without us. So please, tell us your experience as an entrepreneur in this sector, and does this resonate, or how are you seeing these things?
It's been a very interesting journey, because having come from the financial sector, I thought it would be very easy to access funding. But because our ideas are very novel, so some of the green issues, and for us, we believe that the solution lies in trade, it lies in a wholly sustainable commercial model for restoration. So what you find is that everybody says, but you have no experience in running, say, a factory or something like that. So you find that even trusting the entrepreneur, that they know exactly what they want to do and what the steps they need to take, is a big challenge. The other thing, like, say, for instance, in Africa, where perhaps our communication with the funders is very different. So we don't speak the same language. We don't put our numbers in the right way. So you find that then accessing the right capital market or funders becomes a big challenge. And then I also see that in terms of policy, say, let me give you a light example. If we want to engage our governments in terms of tax waivers and things like that, you find that they tell you, oh, we can only finance and we can only consider a tax waiver for a business of a certain scale, and it's really so big, say $5 billion or something like that, or $50 million. So what happens to the smaller person who then will scale, or who has a potential to scale? So those are some of the things that I, have experienced personally, and I think they need to be dealt with. It's about trust. It's about giving access to markets, and also then reducing the barriers to trade. So if you're saying I have to, for us even to access, say, things like carbon credits, it costs as much as putting up a factory. So then it becomes very difficult to access the kind of funding available for green enterprise.
Thanks, Carol. So Santosh, so accessing carbon credits costs as much as putting up a factory. Now that is a challenge for the sector. So how at IntelliCap, I mean, you have a bit of an overview of the sector. How are you seeing things really in terms of why the SME sector has, I started in the SME sector more than 20 years ago, and we called it the missing middle then. And I still came back, to the SME sector. We still call it the missing middle. I prefer to call it the marvelous middle. But how do you see this from IntelliCap?
So I think, thanks for inviting me to speak here. And I think the speakers before me, Arunava and Vivek and Kel, have pointed out some of the things that we have been saying for almost like last 10 years, and the situation has not changed. So, and I can safely say that it's not only about green businesses, but most of the small businesses are struggling there. But I would focus, because some of the problem that Carol highlighted was primarily inherent in the small businesses, but green businesses are small businesses than SME businesses. But before, the carbon credit, I'll come back to that because I have a strong point to make there. But before that, I'll talk about the green businesses, why they are getting the treatment they are getting right now. I have 3 points. One, the green businesses, require a bit reimagining of the ecosystem that support entrepreneurship. I'm making a broad statement, primarily because of the reason that the financing engine, the financing ecosystem is not tuned and not designed for this. Most of the times, we need to adjust the green entrepreneurs' business models, their financing needs, their financing mechanism to the existing financing ecosystem. They have not modified, customized to meet their needs. So we are basically reshaping our business models and saying that, okay, can you finance this? That's what exactly I'm hearing from most of the entrepreneurs that we are supporting across Global South. Second, the green businesses, and I'm expanding the boundary of green businesses because in the COP26, you will see that a lot of focus will go to the net zero goals. And that means you are going to look at the nature-based solutions to take the carbon from the air and be net negative. So mitigation and then nature-based solutions, that's another difficult topic. But the green businesses require certain complexities in the business models. They often work with communities. They often work with the governments. They often work with a very different set of stakeholders, which commonly are not part of the traditional business models. So the business models, the way they work, they engage the communities in a different way. They engage the government in a very, sometimes the government is enabler, sometimes government is a consumer. Carbon credit is a good example of how the revenues come from a very different kind of mechanism. Now, these business models add a layer of complexity to already kind of perceived as less scalable business models. That's second thing. Third, the green businesses require a fair bit of technical knowledge in many of the specified areas. And that ecosystem to provide that capacity or guidance is not the Arunava and I, we have worked very closely on supporting clean cooking and energy access in India. And we realized that how difficult it is to scale those things because the technical capacity does not exist in the kind of way that we look. So these three have completely, overshadowed the potential that these businesses have. Now, coming up to the solution side, and I wrote many pieces that how the financing system need to be reimagined, especially the climate finance piece, that can flow to the small businesses, that can flow to the businesses which are not having the right kind of technical know-how to avail them. The line I have been quoting is that the climate finance, the carbon credit need to chase the entrepreneurs and not the other way around. We need the mechanism where it reaches to them. It should be added, oh, you are a green entrepreneur, here is the money available to you, just go and grab it. Now, coming back to what Intellicap Aviskar is doing, I think we have been working a lot on these sectors, and we are on the verge of, two major programs that we are doing. One on the providing capacity building support that IKEA Foundation has been working with us in supporting Green entrepreneurs. We're very excited about that opportunity, where we look to build a business model, we support communities and scale that up. But second thing that we are doing at a group level is setting up a carbon first fund. We are saying that we will invest in the carbon first funds. 3 points I want to make. Doing that, we have been working on that for, say, now almost 2 years. We learned 3 things. We have to kind of reimagine the way we were investing. First, we realized the business models are very different. We don't know them. So we started studying them. Second, the returns were mostly very different in quantum and in kind. We are now talking about return only in the carbon credits. We can just say that we'll invest and give us the carbon credit. We'll support you in that because you're creating a value. And third, the tenure of the investment. Nature-based solutions, I'm giving one example. Nature-based solutions require you a 10 to 15-year gestation period. Most of the funds have a life of 5 to 7 years. With a 5 to 7 year life of fund, how can you finance a business whose revenue is spread over 15 to 20 years? So I'll stop here. The larger point I'm making, if the green businesses need to be scaled up, we need to visualize the ecosystem in a very different way. The existing one is inadequate.
Thank you, Santosh. And for those of you who are live tweeting, as I know some of you are, there were lots of nuggets here in the discussion already. And I very much appreciated your comments around the need for adaptation, not climate adaptation, but adaptation of the financing system really to be more supportive to support green entrepreneurs and for carbon credits to chase the entrepreneurs and not the other way around. So we can envision that world, I think, here at Andy. So Carol, let me come back to you again. You know, I really want to make sure that we are spending time on the entrepreneur's perspective. Tell us a little bit more about your business and how is it taking climate action? And then a little bit also, because you've just gone through an acceleration process, and how has that helped you both as a green entrepreneur and also as a woman business leader? And we'll come back in a moment to why am I talking about women business leaders in this context?
Okay, thank you. Greenport was a business that was started, just to give people a return and help them own forests. So we started this about 7 years ago. And at that time, we were looking at sort of a crowdfunding model to establish some bamboo forests in Kenya, and then thereafter grow that to a fully integrated value chain. Then we discovered that there were no seedlings, and we also discovered that how are we going to get value? So we decided then to backward integrate into just proper seedling production on scale, as well as then looking at which products we wanted to make in the future. So our business, it's complex. It's a small, big business in that sense. And we then discovered that the communities were also interested in growing bamboo on their own land. So we then incorporated that, and we had a model where we would encourage people to use their land as a restoration factor, and at the same time earn some return from it in 5 to 7 years, which is the maturity period for bamboo. And then after that, we then discovered restoration by chance, because some of the landscapes that we had restored were really degraded. And when we compared what was happening to our neighbors, after them ignoring restoration for many years and what we were doing, it then became obvious to us that that was the biggest opportunity that we had. So we've been working to restore the Mara River, which is famous for Masai Mara, where we have all the dairy, about 45% of the dairy that belongs to Kenya. And we're also looking at Kengen, which is the power generating company, to restore about 1,000 kilometers of lands, of riparian area with them, to reduce how much they have to use on siltation to desilts the dams. It's a hydro company. I mean, it's a power generating company, so they use hydro. So if we grow the bamboo upstream, it means then that they reduce that. So I think we have got such great opportunities to restore Kenya's rivers and even move across borders to Uganda and Zambia in the near future. Now, moving on to the restoration, to the IKEA Accelerator program, of which we might talk. We're very happy to have had that opportunity. And for us, our key learning was just about focusing our message, about telling stories about our business, about really measuring social impact on what we were doing on the ground and the impact that it was having on the smallholder farmers that we're working with. We're hoping to work with about 100,000 smallholder farmers in the near future, in the next 5 years. And also then beginning to get access to opportunities like this where we can tell our story and have a platform where we can then really grow, especially on the trade side, because we believe that we want to develop commercially driven products for the international market. So that's how, and as a woman leader, well, I think for me it's exposure. I've always really resisted the women's side because I feel that, we should then, as women, just come and share our story. What can I say? Compete on an equal ground with everybody else. But this really also does give us a great opportunity to express ourselves as a woman-led business. So I think it's been such a great experience, and we believe that we are much better off now, having gone through the Accelerator program, which I called an MBA on our own business, than when we started 5 months ago. So yeah, so I think that's my comment on that.
Great, thank you very much, Carol. And just to everybody in the audience, there are only, when Andy did some research through the Global Accelerator Learning Initiative, and this data point may now be a couple of years old, we actually found that there were only at that time 25 climate tech accelerators and incubators outside of OECD countries. So Carol is already in the minority of green entrepreneurs who's been able to actually benefit from having acceleration. And clearly this is a message for us post-COP, since Dr. Ghosh seems to think that COP is not about solutions. We have to come up with the solutions, I think, and certainly one of the areas that Andy is focusing on is how can you help support and accelerate green entrepreneurs if you don't have the incubators, if you don't have the accelerators? And so that's really a call to action across the sector to really look at how can we be providing the support to entrepreneurs like Carol as well. So I'll turn now back to Dr. Ghosh. You have been, and Carol mentioned about smallholder farmers and job creation potential, and you've been a real champion and advocate around investing in job creation in the green economy, and especially in India. So where do you see most of the job potential coming from? What is the level of investment that's needed? And if I can come back for a second also to the gender element. Women are most vulnerable to the effects of climate change. And yet we're still seeing a lag in terms of the number of women entrepreneurs. So give us hope for the next generation of women entrepreneurs in India. How are they being incubated right now, and what's happening to support them?
Well, first of all, to reveal personal bias, I hope women entrepreneurs succeed. My wife is I would argue, is a green entrepreneur, and I sincerely hope that she succeeds. I'm, pitching my pension plans on her success. But jokes aside, here's the challenge. Number one, if you think about where, as you said, Rich, and or rather as you asked, where will these jobs come from? The more distributed and decentralized your effort, the more is the labor intensity of anything. Whether you're talking about agricultural processing, whether you're talking about distributed energy, whether you're talking about distributed water, wastewater treatment, whether you're talking about nature-based solutions that can, withstand climate shocks and so forth. But this distributed, decentralized ecosystem is kind of polar opposite of where money tends to go, which is top-down, concretized, and over-engineered. So this goes back to what Santosh was saying. You will never, this is an uphill battle that you can never win if the finance is structured towards large centralized systems rather than distributed systems. That's one thing where we have to then decide, do we want jobs or do we want just transactions? The second thing about women entrepreneurs is, of course, I mean, this has been shown again and again, their better credit history, their better ability to repay loans, etc. And they are yet the ones also without, often without collateral. And therefore, if you don't have a financing system that is willing to provide loans to those who don't have assets on their balance sheet, they will not scale. And I was arguing this just last week during COP, that isn't it perverse the way the financial system is structured, that those that do have large balance sheets tend to get off balance sheet financing. And those who don't have large balance sheets don't have access to off balance sheet financing. Right? The third challenge, and this is not just limited to women, the third challenge, a few months ago, I talked to several entrepreneurs in the circular economy, and I asked a provocative question: can we get a circular economy unicorn, a company that gets valued at $1 billion? And here's the problem. The problem is that often what they are doing, it's not just that it's not scaling, it's that the off-taker, the client could be a B2C client, or it could be a B2B client, whether it's bamboo in the case of Carol, or it could be biodegradable materials made into packaging, or it could be recycled plastic, etc. The client doesn't believe often the integrity of the product and the process. Now, how do we use modern technology? Maybe, and I know I'm probably just throwing terms into the conversation because I'm not an expert, but platforms like blockchain, etc., to increase that integrity of the process, where the entrepreneur does not have to keep running around trying to prove themselves, but that they're part of a system that is automatically vetting and rapidly fixing it for them. The other part about this is finally about, do we have an ecosystem where more venture capitalists are coming in? In the conversations I had with many of these entrepreneurs, and some of whom were women, they argued that what they get is they get the angel investors, and then they have interested private equity people. But what they don't get is in the middle. In the middle, you don't get the venture capitalist who is willing to come in. And related to this is the scale of the investment. Why do we assume that a reasonable sized corporation, say with say $200 million of sales, right, will get there's a certain transaction cost associated with what their overheads will be, et cetera, et cetera, et cetera. But as soon as we go to the small entrepreneur, we assume that small entrepreneur, I think as Vivek was saying earlier, will incorporate all the roles within herself, right? There'll be the chief innovator, chief financial officer, chief marketing officer, everything, right? So you have to agree and be willing to invest in a small company with the mindset, at least, of a medium-sized company, knowing that you will need to get them to a scale, and that requires a certain set of overheads that cannot come from a simple grant-based handout. So when you start unpacking each of these challenges, and none of this is insurmountable, you realize that the playing field has been structured very differently, where we call them green entrepreneurs, but we don't actually treat them as entrepreneurs as we would treat another entrepreneur. The last thing I want to say is at CEW, we started a program along with another social enterprise incubator, Will Grow, last year, called Powering Livelihoods. And if you have to bring the energy transition closer to people, or you have to bring a water transition closer to people, you have to be willing to invest in a way that it increases the income generating potential of these households. And, Richenda, you were saying how, there are so few incubators and accelerators outside of the developed world. Equally, we counted 36 initiatives across the world on energy access. Only 3 focused on livelihoods. So I would strongly nudge, and since IKEA Foundation is represented here, and this massive new platform that has been announced about 10 days ago, the GEAPP, the Global Energy Access for People and Planet. Can it have a dedicated vertical that focuses on livelihoods? Because only then will the population of developing countries and the poorest developing countries provide that political support, that political sustainability for sustainability, right? Because in the absence of that, you're really offering no deal for development for the developing countries. Hence, the negotiators take a very hardline position. Hence, we have a rhetorical war of words rather than a literate conversation around financing and investment in entrepreneurs.
Thank you very much. So let me turn to Vivek and Dr. Ghosh. I having come from the energy access world, I completely agree with you. And I've also worked for 10 years to change the terminology productive use, because that's one that if you're not in the sector, you don't really understand what it means, but livelihoods and then jobs, people certainly understand. So Vivek, let me turn to you now. I think there was a slight challenge in there, but IKEA Foundation, you're definitely putting your support where your voice is, and really are one of the leading, if not the leading, foundation alongside Rockefeller Foundation right now, focusing in this area. So just you can come back to the energy access piece if you like, but how did IKEA Foundation come around to this area of focus on supporting green entrepreneurs and green entrepreneurship ecosystems? What is the rationale for IKEA's work in this area?
Right. I mean, this is very interesting, and this is what I'm going to just share, but also kind of weave into or link up with what Dr. Ghosh was talking about. And our interest and focus in promoting green entrepreneurship is fairly recent, fairly new, and it aligns with, number one, the IKEA Foundation's, our foundation's strategic focus on promoting both livelihoods and protection of the planet, as we call it. What we call at the foundation is a people and planet positive approach, but also in response to what is happening in the world today, in the sense that, if you look at, there are glaring gaps between the number of people who are entering the labor force or labor market vis-a-vis the number of jobs available. And at the same time, we see depletion or degradation of our natural resources and environment. And the pandemic, as well as the climate crisis, both have kind of made it imperative for us to really find ways, viable pathways that can help in moving towards, in an accelerated way, towards a green economy, towards a low carbon economy. And this is where, we felt that we can look at this whole continuum of livelihoods and climate, livelihoods and environment, and promote green entrepreneurship, because the idea is to generate employment opportunities and therefore livelihoods, as well as, address an environmental problem. And we feel that, entrepreneurs, by their very inherent nature, they think out of the box. They bring their agility. They have a risk appetite. So, this is where we need, innovative solutions, as well as, scaling up of existing solutions at the local level, its adoption by, what's already there. And I think green entrepreneurs or entrepreneurs can really play an important role there. And if we, and in the sector, I mean, all of us are working with, different types of entrepreneurs, and we are trying to help them start or grow the businesses. So no matter how much we kind of work with them, if we are not focusing on mobilizing the ecosystem, then we won't be able to move the needle significantly. And therefore, for us, working at the ecosystem level becomes very, very important, because if we have to go to scale, we have to mainstream, and for that we need to galvanize the ecosystem. So that's where we, come in with our perspective on looking at livelihoods and environment as something inseparable, and working with green entrepreneurs to create that conducive ecosystem for it to thrive.
Great, thank you. And while you have the floor, Vivek, do you want to say a few words about the new initiative that you've just that I know it's not in your area as such, but that IKEA Foundation has launched around COP with Rockefeller Foundation?
That's right, the Global Energy Alliance for People and Planet. I think that really speaks about the point that, while we are trying to decentralize renewable energy and access to it, providing access to people with, clean energy options, the livelihood is very, very important here. And one of the aspects that this alliance is looking at is also, the potential to create over 150 million job or employment opportunities. So these are very early days, and we are really looking for opportunities how we can not only, kind of create opportunities for adoption of pure technologies, productive use of renewable energy, but also with a strong livelihoods lens, because that is where, the opportunities for also entrepreneurs, small and growing entrepreneurs lies. It is like spurring the market. And it is also like kind of bringing the whole demand and the supply side together. So we see this creating a lot more momentum, and also kind of, creating some traction in the market for small and growing businesses to play a much more critical role and bring that livelihoods perspective along with improving access to clean energy.
That's terrific. Well, kudos to you both for having launched that and certainly bringing the agricultural sector to the table. But since I think that's also part of the value is actually helping to remove the silos that have existed at times as well. So, and I think it also shows the importance of concessional financing, of philanthropic capital, of being able to go places and fill in those gaps and bring groups together that you cannot put, within the transaction. You can't expect Carol and Greenport Enterprises to be able to really spend their time really looking at the ecosystem level. So that's why players like yourselves are needed to do that. Santosh, if I can return to you to really look at the solutions element again. We spent I think a reasonable portion of the session focusing on the challenges and the problems, but if we're going to be able to really step up and showcase that we are the solutions providers, in your ideal world over the next 10, 15 years, what would climate finance look like to you? And we've talked about the need for transformational climate finance and green entrepreneurship finance. So what would that look like for you? Can you give us an idea of some of the solutions, maybe seeing some things that are working already that you think we can take and run with? And particularly since Vivek has the biggest checkbook in the panel, what would your advice be to IKEA Foundation on some of the areas that they should be looking at?
A very long list of wish list for Vivek, considering the problem that we are solving is huge, but I will kind of focus on a few ideas. And I will not go to the solution. I'm giving you a couple of kind of broader guidelines which are driving the solutions. One, when we talk about green businesses or green entrepreneurship, I would suggest that there are two things we need to do differently. One is that making them investment ready. While we talk about investment not flowing to them, 80% of the problem is getting them investment ready. And this is an activity which would require the philanthropic foundations and the agencies like IKEA and others to come together and make them investment ready. This is the 80% of the battle won if we do that. So that's one part of this thing. Second piece, I would say that the technology is going to play a huge role in bringing together a number of small entrepreneurs so that the finance can flow. The aggregation of the the financial needs and the kind of resources that we have, we can do that. I think, Richenda, we are working with Andy in India to create a platform for flowing, making the climate finance flow to the small entrepreneurs. We are just trying, if it will take 20 years for the climate finance to come in the size of $50,000, then rather I will club $50,000 ticket size and make a 5 million ticket size so that it can be financed. So we are working on that mechanism. So one is that how we can make them receive the climate finance. They should be investment ready. Second, how we can get the climate finance to flow. The third dimension, I think I would also differentiate between the type of climate finance we're talking about. Carbon money is a climate finance. We are talking about result-based climate finance. The small entrepreneurs have not kept that. If I have to give you a one kind of big picture, I would propose the pre-verified carbon credits. The technology is there. The mechanism is there. We just need to pre-verify the carbon credit and saying that this credit is available to you because the activities that you're doing is resulting into that. We have kind of done all the technical analysis. Here, just sign the check and you get it. It's like a pre-verified loans, pre-approved loans that you get on your phone that, okay, I have a pre-approved loan because I know your credit history, I know the income. If I know the activity, I know the impact, can't I have the pre-verified carbon credits available to them? That's the ideal world of climate finance. Last part, the ecosystem. I again focusing on Vivek talked about, Arnava talked about. You have, initiated the ecosystem building with institutions like Clean, etc. What we are looking at that, even the ecosystem need, to be kind of reimagined. Even the Clean, CW, IntelliCaps, Aviskar, all of us who are working, we need to reimagine ourselves. One big picture for me is that what I can reimagine. I can reimagine that when a small entrepreneur comes, I'm not talking about the problems that they face and how you will not get the climate finance. Do we have the solution? If they can't scale, do I have a partner to scale? If they can't get finance, do I have a way to give them collateral? You talked about women. The one problem I would say, land rights not available to women in India is a major challenge in getting women entrepreneurs get access to capital. It's a huge challenge. If you're going to work in DRE space, you are working in nature-based solution, the land is not in their names. Change the land rights, they have a collateral. So I would summarize it. We need to focus on making the entrepreneurs investment ready. We need to kind of, if the reimagination of ecosystem cannot happen, then probably technology and our aggregation can think of addressing that problem, because we can't wait for that reimagination to happen. Third, we need the women to be much more part of the formal economy. There are some inherent flaws, gender injustices that we need to take care of if they want to be moved to it. So I'll stop here.
Great, thank you, Santosh. So before we go any further, we've got a number of questions that are coming in from the audience that we'll go to in just a moment. So Carol, we've heard about entrepreneurs being investment ready. So let me just ask you, quick yes or no answer. Are you investment ready? Totally. There we go. That was a yes. So just to put it out there, we have entrepreneurs who are investment ready, and Greenport Enterprises and Carol are one of them. So just moving now to some of the questions that have been coming up. A lot of them have actually revolved around the theme about, but what about the corporates? Is there a way to actually interplay and engage between the large businesses and the small businesses, whether that's through a supply chain or whether that's through looking at circularity, and one of the questions asking particularly around how the costs of compliance seem to be for sustainability, it seems to be too much for large corporations. So they like to do it as long as it doesn't cost very much. Well, I would actually say that large corporations have more budget that they can put on sustainability. When you're a small entrepreneur with a really, really tight budget, then the cost of sustainability is probably that much more for you. So if a small entrepreneur can do it, then I'm sure a large corporate can do it. But maybe you could all just comment on this, how you see the interplay between large and small corporations, and are there new partnerships that we can help to develop and support? So this is to any of you.
I think I'd like to start. Okay. I think for us, our ultimate goal is to do it right first time. So we find a lot of expectation that we would start on a cottage level, then grow to more industrial level. But our desire is to work with larger corporations, let them tell us what they want us to do and hold our hand in the process. So for instance, if IKEA decided, look, we want 100,000 of this kind of product, we would then bring the equipment to do that kind of product and get it, and then work on, ensure that the quality is the right kind of quality to meet the standards of IKEA. So normally companies expect us to, first of all, invest, make the mistakes, and then now we become suitable for engagement with them. So I think we need to change that whole thing around. I think also in terms of, just supply chain and, things like FSC certifications that are expected, again, very expensive. So can we reduce some of the barriers to some of these trade opportunities that are present, so that then we are able to access it quickly and without too much bureaucracy in the system?
Could I come in as well? Just a couple of points on this important question. We've been talking about green entrepreneurs, but one of the other things that we did at CW was surveyed hundreds of medium enterprises across the country in different industrial clusters. And one thing we saw, one of the biggest triggers of what it takes for a small, medium business to invest in, say, energy efficient equipment, etc., is twofold. One, if they basically have information of how they are using energy or what is their resource footprint. So just that basic auditing often serves as the nudge. The other is how integrated they are in the supply chain of a larger enterprise, right? Now, if we take both these insights and say the large corporates, India right now is developing a green taxonomy, for instance, for finance. And one of the things I've been nudging in that process is how do we make a green taxonomy, not just about definitions, but things that are more unique to an Indian situation, such as that the green taxonomy would also be green if you're also encouraging more job creation, or you're also encouraging, finance flowing to, say, women entrepreneurs, or to more economically depressed areas. Now, what if there were, in addition to definitions of what is green finance, an additional sort of tax incentive for the large corporation, that you will get an extra tax incentive if you are able to procure at scale, products which are greener from your supply chain, right? The second element of this, and I mentioned this earlier, Santosh mentioned this earlier, how do we create the digital platforms that pre-verify what it is that you're doing, and so you're not trying to certify yourself every single time. You have a ready supply chain going on. The third, ultimately, is end consumer financing, and we've not talked about this here. Why is it that I can walk into a local electronics store in a small town in India and buy a 70-inch television costing $3,000-4,000, right, on an EMI basis, even though I'm living in a small town, etc. But I can't walk into a similar store and buy an equivalent costing rooftop solar panel from a green entrepreneur offering me that solution on an EMI basis. I'm the same end consumer, it's the same capital cost. I'm in the same town, it's the same house. On one hand, I get end consumer financing, on the other hand, I don't. So I think some of these basic things, if we can start solving, then you suddenly open the spigot for a large volume of green entrepreneurs to scale their businesses.
Great, thank you. So end consumer financing, Vivek, I think you wanted to comment as well.
Yeah, just quickly, I mean, this is a very important question that we are also, trying to find answers to, and also, obviously, we are trying to do it from a philanthropic perspective. And when we are looking at, small and growing businesses, the important point really comes in that as a philanthropy, how can we really support them to get to a stage where they are investment ready? And this is a point that Santosh made. And I think it's a very relevant point, because that's where you can then, get into tapping the commercial capital or link them with the value chains. So I think that philanthropic capital as a catalyst is really required to kind of, build that cohort of strong enterprises to really kind of get integrated with the value chains. The second thing is that, just to cite a practical example, we recently launched a couple of weeks ago, or earlier last month, a similar kind of an initiative in the textile waste sector with two organizations, NBU and Circular Apparel Innovation Factory. And the whole idea there is to kind of mobilize the private sector through a platform approach and link them up with the different types of small and growing businesses in the whole value chain. So let's see what the results are going to be and how we are going to kind of, inform and mobilize the whole ecosystem. But those are some initiatives that can, help in providing more insights, how we can, work with corporates and bring them and link them with small and growing enterprises and businesses.
Great, thank you, Vivek. And can I say we've got a number of questions also coming up in the chat from entrepreneurs themselves saying, how can I access finance climate? Who should I go to? Where can I go? So I will just give a short plug for Andy here. Andy is not the place to go, but our members are the ones who are the intermediaries who are working with entrepreneurs like Carol and many, many others. So by all means, go to andyglobal.org. Which is our website, and you can look at our list of members and see if there are members who are working in your country, in your community, in the sector that you'll focus on as well. And definitely go and start a conversation with them as well. And they may well be able to give you some ideas and guidance on how they can support you as well. So just want to put that one out there specifically. And then we are, just to say, we're going to be wrapping up in a couple of minutes this part of the discussion. And then we have a launch announcement that we will ask everybody who is joining us now to stay on for, just a very short launch announcement, which will particularly answer one of the questions that has come up around the evidence base and the looking at the positive impact for green entrepreneurs. So I will come back to that in just a moment. But before we do that, I would just like to ask for any quick round of concluding remarks, just a popcorn style couple of sentences on what you would like to leave the audience with today in terms of something hopeful coming out of COP on solutions and where we can go to. So I will pick on Santosh first.
So I would say that the one big takeaway for me is that the hope that carbon market would revive. A lot of good signals. And that's the big thing we have learned from the previous carbon market. Hopefully we have improved. So all the entrepreneurs who are kind of working in any space that creates green value in terms of biodiversity, in terms of carbon emission, should look for that. I'm not saying build your revenue models thinking of that, but that is available and that could increase your attractiveness of business. So to go for that, that's the one I think all other points are quite well known. I'm just saying, look at that space. That would be quite attractive.
Thank you. Carol. Oh no, let me come back to Carol, because the entrepreneur should always have the last word. So Vivek.
Yeah, two quick points. Looking at the COP commitments on methane emission reduction and deforestation, I would encourage all of us in this sector to start expanding to other sectors of high relevance and impact. When we talk about small and growing businesses, usually we talk about the traction that we see in the clean energy and the agriculture space, and a little bit in waste now. So I think this is a good time to demonstrate the breadth and the depth of the role and potential of green entrepreneurs. And that we can do by expanding and exploring other sectors where they can really play a very important role, not only in addressing the climate issues or environmental problems, but livelihoods. It's very, very critical. So that's what I would like to kind of, emphasize. And I would also say that, with this particular session today, we should start now garnering momentum for COP27, which is in Africa next year. And I think we have good enough time so that next year when we're having conversation, we are having something concrete with the climate SMEs to take to COP27.
Great, thank you very much. So a vision for us all towards the next COP, but making it more SME focused. So Dr. Ghosh, your thoughts, please.
No, I started on a sour note, I guess, not to spoil the mood. But, week one of COP was full of initiatives and platforms that were launched that had actually nothing to do with the negotiations. So to the extent that COP serves as a sort of lightning rod around which many of these other initiatives, whether it's on methane, whether it's on forestry, whether it's the IKEA Rockefeller partnership that was announced. Those are the platforms that we need. And just to build on what Vivek said, I think the road to Sharm el-Sheikh should be a road that delivers a deal for development. We will not have a low carbon economy that will be politically, acceptable and legitimate and, ethically just if it widens the technology gap, if developing countries and entrepreneurs within developing countries feel, they don't have a future in the new climate economy. So, all our efforts as civil society, think tanks, investors, entrepreneurs, philanthropic institutions should be to deliver a deal for development and force the negotiators to heed the signals and the signs we are giving them rather than the other way around.
Great, thank you. And Carol, the last word before we pivot to our launch.
I'll speak for the entrepreneurs here and just say we are ready to move from debate to feet on the ground. And I think we'll see a huge shift in terms of the people who are taking up solutions, green solutions in the future. And for us, I think also great opportunities coming up, and because people are beginning to notice and to really engage in the debate. So thank you very much.
Great. Well, thank you all. A big thank you to Santosh, Arunabha Ghosh, Vivek, and Carol, to all of our panelists. If you still have questions, please hold. You're welcome to contact us afterwards or contact us through Twitter. We will now pivot, so please don't go away, stay tuned to a launch event that we have. So Vivek, if you could stay with me, if our other panelists, with sincere gratitude and thanks from me, if you could turn off your cameras now, and if Matt from the Andy team could join us as well. I'm delighted to announce that we are launching today a new partnership between the Aspen Network of Development Entrepreneurs and the IKEA Foundation, that we are indeed hearing you in real time around this question about the evidence base and the research on green entrepreneurs and green enterprises, and how do we know it's positive, and what are the kind of the results and outcomes. We have entered into a partnership to undertake research over the next 1.5 years exactly around the green enterprise economy, and to help through undertaking this research, really to bring together diverse organizations in partnership to accelerate the growth of green entrepreneurship in 2 countries, initially in Kenya, where Carol just joined us from, and also in India, where both Santosh and Dr. Ghosh were engaging with us from as well. So this is the first time that Andy has worked directly with IKEA Foundation, and a big thank you to Vivek and his colleagues and team at IKEA Foundation for this support of this work. Aspen Network of Development Entrepreneurs, hopefully many of you on the call are familiar with us. We are an 11-year-old program of the Aspen Institute, working through 10 chapters, but actually 12 countries around the world, focusing on supporting small and growing businesses through a network of intermediaries. So that's entrepreneurship support organizations, impact investors, donors, and others, who are all focusing on how do we actually help create entrepreneurial ecosystems that work for the entrepreneurs themselves. So I'd like to just invite Vivek now to say a few words about IKEA Foundation's support for this initiative. So Vivek, thank you.
Thank you, Rich. And I think we are very delighted to ink and announce this partnership between Andy and the IKEA Foundation. And as you know, you have given the background to this whole why we are partnering for this research on the green enterprise economy. But before that, I just wanted to take a minute to share with everyone about the IKEA Foundation and how this partnership fits into what we are doing to promote green entrepreneurship. So at IKEA Foundation, as we all know, that it's a grant. I mean, a lot of people on this call would be familiar that we are a grant-making philanthropy, and we really aim to improve the lives and the livelihoods of people, along with protecting the planet, so that it helps and sustains the future generations. And one of the things that we very strongly believe in is that families need both financial security and stability, along with a healthy environment, if they and their children have to thrive. And this is a guiding kind of direction for us, that livelihoods as well as protecting the planet, they are inseparable, they go together. So at the IKEA Foundation, we have a couple of verticals or portfolios that are working towards improving livelihoods and protecting the environment and climate. And one of the things that we are doing under this particular program on employment and entrepreneurship is to promote green entrepreneurship. And we have spoken a lot about it. We see the potential of it for creating employment, livelihoods, and addressing a range of environmental problems. Now, the whole idea why we want to kind of do this is to kind of harness the potential and the power of entrepreneurs to turn some of the environmental challenges into business opportunities. And we know that they have that potential to do it really well. When we were doing this, last year, when we were kind of renewing our portfolio strategy to get more focused on promoting green entrepreneurship, we did a lot of evidence review. And we realized that while there is evidence available in terms of the impact and effectiveness of conventional entrepreneurship, there isn't much available in this green entrepreneurship space. And that's where one of the priorities for us at the foundation and in this portfolio is to generate evidence and knowledge and bring together different organizations so that we join hands to promote and develop green entrepreneurship. So therefore, in this slide, this partnership really helps us to do that, to begin with in Kenya and India. And we want to bridge that evidence gap. We want to build the field and the sector. And as you said, Richenda, that in partnership with ANDE, we also want to inspire other stakeholders, other actors to come together to build on some of the existing solutions, how we can scale them, but also through our partnerships, identify some of the gaps and plug them and in order to kind of fuel and encourage new innovations. So that is where we are in a partnership, and I think we are very excited and looking forward to it, so that it generates some strong evidence which we can disseminate, and we have some concrete action going forward on it. So let me conclude by just thanking you, Richenda, and your wonderful team at ANDE, and to our lovely colleagues Patrick, Laura, Surani, and Lotika at the IKEA Foundation, who have been working on this to make this happen. So a big thank you to all of you.
Thank you very much, Vivek, and we're very grateful to you and your team for all the support you've given us so far. Let me turn now to Matt Gutentag, who is ANDE's Director of Research, and Matt and his team will be working together with Santosh and others from IntelliCap on conducting this research over the next year or so. So Matt, can you just tell us a little bit more with some granularity what to expect, and how can those organizations that are part of this call and the audience for the panel, how can they engage with this process? So if you could just share a little bit of the details with us.
Sure, yeah, I'll briefly give a little bit more information on that. First of all, thanks to all the panelists for a really fantastic discussion. So we're really delighted to be able to dive into some of these kind of meaty issues from the research perspective that came up during the panel. Andy has significant experience in the research realm looking at things like acceleration, the effectiveness of acceleration with our Global Accelerator Learning Initiative, and mapping and understanding the dynamics of entrepreneurial ecosystems with our ecosystem snapshots. But we're really delighted with this the support of the IKEA Foundation to be working with IntelliCap to kind of bring that lens to climate entrepreneurship and dive deeper into who's doing what to support the green economy, where are the gaps, and where's the impact. Like I said, we're really excited to bring some of the capabilities we have from previous research projects here, and also to bring IntelliCap into the mix, because they have significant experience assessing and working with and understanding green entrepreneurs. So we're going to be looking at all aspects of the green economy in both Kenya and India to dive into who's doing what are the challenges, where are the opportunities, and importantly, where's the impact. And at the same time, we're going to be directly engaging stakeholders in the green economy to actually develop some interventions to address some of these challenges and barriers. So we're going to be really trying to make sure that our research is immediately action-oriented. So we're not only assessing, but at the same time actually testing and modeling some solutions. And while we're going to be initially focused on Kenya and India, we absolutely have a global eye on this issue. Entrepreneurs have a role to play everywhere on this topic. So this partnership with IKEA Foundation and IntelliCap is happening alongside a broadening of our effort focused on green entrepreneurs everywhere. So for example, we're currently working on a guide to small and growing business support organizations focused on how to use climate metrics in their work. So we really want to emerge from this with a suite of tools, evidence, and research for all those involved in supporting small and growing climate entrepreneurs. So if you are working on the green economy in Kenya and India, we'd love to connect to make sure we're linking you into these platforms as well as involving you in the research. So just please do reach out to me or to others on the team and to have a discussion there. Make sure you're on our maps, that your insights are included. And we're just really excited about this partnership, and thank the IKEA Foundation for their leadership here and IntelliCap for their partnership.
Great, thanks, Matt. So, thank you all for staying with us. We're delighted to partner with you all on this, and very eager to be able to share the learnings from this research with the community as we work through the next year or more of research. So I'm very excited, and a big thank you again to Vivek and IKEA Foundation, and a big thank you to all of our panelists. I've got a lot of points to take up in terms of all the great suggestions, all the great areas that we need to work on as a sector, and we'll be looking at working with many of you to take all of those forward. So without further ado, a big thank you again. And we will, as Andy and as IKEA Foundation, we are really committed to working to support green entrepreneurship and green ecosystems, and really moving forward on climate action. So enjoy the rest of your day or your evening, and thank you again for joining us.